Yes. Good evening, all. Hope I'm audible as well as visible. Yes. Hope I'm audible as well as visible. Yes. Yes. First of all, I'm sorry for the delay. There was bit technical issues. And brief introduction about myself. I'm Rastrith. Uh, I'm teaching different level of CA, that is CA Inter and CA Foundation, and different level of CS Foundation earlier, now CS CET as well as CS Executive, and CMA Inter as well as CMA Inter as well as CMA Foundation in Trisha classes since last 5 years. I think as it's a marathon batch, I think it's enough about me. So we'll straight away jump into this subject now. Uh, what we are going to do is we are going to look at four major chapters: the chapter number 1, chapter number 2, chapter number 4, and chapter number 5. 6, the terminologies, and 3, which is about domestic and international companies. That you can do it on your own, and if time permits, of course we are going to do that. Okay, so straight away jumping into the subject, I'm starting with chapter number 1, that is business commercial knowledge and introduction. First, what do you mean by business commercial knowledge, sir? There are many terms in business as well as commerce. So this subject will put a bit light on such topics, certain business topics, certain commercial topics. So that is what BCK is. So straight away going to domains of BCK. That is what this subject is. First is BCK is vast. Okay, BCK is vast. What do you mean by that, sir? BCK, see, the universe of business is vast. Business is not small. There are many factors in the business. There are ranges of business. So business is not a small thing. It is really vast. So when the business is vast, of course, the knowledge about it, the information about it should be vast. Next is BCK is eclectic or multidisciplinary. That is, BCK is not restricted to one area. For example, BCK is not restricted to area of accounting. BCK is not restricted to the area of financing. BCK is not restricted to the area of marketing. BCK is not restricted to the area of production, which means BCK is really vast and it is multidisciplinary. Okay. See, BCK is eclectic. That is, it derives from various disciplines: marketing, accounting, finance, operations, human behavior, laws, economics, ethics, etc. So business is not just about selling the product or services. It includes various fields of study within itself. Okay. Next is BCK is ever evolving and expanding. Business is not a, you know, the water which is not flowing. No, business, it keeps on changing. The business environment itself like that. It keeps on changing. You never know when the whole business environment is going to change. So it is evolving as well as expanding. For example, 15 years down the line, no one knew what is e-commerce in the business. Until Amazon came, no one knew what is e-commerce in the business. E-commerce came, it bought enormous knowledge, enormous terms with it. Now, for example, artificial intelligence in the business. For previous, let's say 4 5 years, no one knew what artificial intelligence is in the business. But now artificial intelligence is part of the business. I can say major part of the business. So BCK is not restricted. BCK is not, as it is for long years. BCK is ever evolving as well as expanding. So BCK domain are ever evolving and expanding. For example, information and communication technology has introduced several terms in the lexicon of BCK, that is 24/7, B2B, business to commerce, business process outsourcing, etc. So BCK is ever evolving and expanding. This MCQ people might expect, which are the domains of BCK. There are basically 3 domains of BCK. Other than this, if they give any other domain, then that is the answer, which is wrong answer. Or three other option and one this option, this is the right answer. So which are the domains, sir? Quickly, BCK is vast, BCK is eclectic, that is multidisciplinary, BCK is ever evolving as well as expanding. Now, sir, that's all about fine. But we are doing CA. Yes. But why the hell we want to learn about BCK? Why we want to learn about BCK? Because I say don't have subject? No, nothing like that. See, chartered accountant works in different areas. They might be in the business as a profession. You might be in the different segment. For example, taxation, your finance, accounting, all those things you will do. No, to ascertain all those things or to do all those works. For example, your client might come and ask you, sir, help us with the making the strategy or formulating the strategy of our business, how to grow our business. That time you can't tell, sir, I don't know anything about business. All I learned is tax. All I learned is finance. You can't tell like that. So as a chartered accountant, you should be having the business commercial knowledge. So business and commercial sector comprises of large share of CS work arena. Each business has its own peculiarities and associated variation in notions of product, inventory, revenue, profit. So all businesses are not same. For example, you can't tell restaurant business as well as hardware business are same. Restaurant business has its own way of doing business. Hardware business has its own way of doing business. Restaurant business has certain terms, whereas hardware business has different terms. The business which has a information technology as well as the business which is labor intensive are not same. So business is really vast. The chartered accountant shall be able to conduct the audit diligently, take decisions, strategies, make plan and budgets, work closely with business teams. Only when they understand the nuance of the businesses, they can add value to their work. Without knowing what business is, what kind of business. For example, you can't go and ask a restaurant guy, sir, what is information technology? You can't ask him. You can ask him about food. You can't ask him, oh, like how the steel industry works. No. So, but as a chartered accountant, if you want to work in certain industry or if you want to audit certain industry, you should be having idea about what that industry is, what that business is, what are the terms used in that business, all those things. So it is all about importance of BCK for a chartered accountant. In brief, I can tell as chartered accountant works as a employee in different industries, or he can practice in that he should be having knowledge of different businesses, how it works, what are the terms used in that. So your BCK is going to help the chartered accountants in that way. Human activities, that is any activity done by human, that you can broadly divide into two: economic activity, non-economic activity. Sir, what do you mean by economic activity? Economic activity is that activity what human does to do the living, that is earn the living. Okay, those are economic activities. Sir, what do you mean by non-economic activity? Non-economic activities are the activities which is done out of the love, affection, care, etc. As your all faculties give the example, the service of a mom to their kids is non-economical because she don't expect something in return. Imagine tomorrow morning your mom brings you a breakfast and also on table she will bring up bill and ask you people to pay. That's never going to happen, no? So non-economic activities are those activities which is done out of affection, love, passion, hobby, etc. Whereas economic activity are those activities which are done to earn a living. Those are economic activities. So economic activities are said to be driven by a rationality, that is by thinking. What do I get in return? Without getting something in return, we are not going to do any economic activity. For example, me taking a class, for that they are going to pay me a fees. This is an economic activity. If the same thing if I take out of care for a CA students, then that is non-economic activity. That is giving something to the society. So economic activities are said to be driven by rationality. What do I get in return, or what is in it for me, or self-interest. Non-economic activities are driven by emotional, sentimental reasons, that is selfless concern for the welfare of others. Thus, human engagements in all social, religious, cultural, personal, recreational, charity and patriotic activities are bundled together as a non-economic activities. So hope it's clear. economic activity and non-economic activity. To be precise, economic activities are done to earn the living, food, shelter, good lifestyle. To do this, when you do any activity to earn these things, it is called as economic activities, whereas you are not expecting anything in return. You are not expecting anything in return. You are just doing it out of affection, love, care. Those are non-economic activities. Now the question comes, sir, what are the characteristics of economic activities? Economic activities are income generating. Economic activities generate a income. Economic activities are productive. That is, for example, conversion of raw material into a final goods. That is a productive activity. So it is done due to economic needs. No, someone won't convert a raw material into finished goods unless he don't want a money from it, which means economic activities are productive in nature. We can transfer various raw material into useful product and sell them for an income. Further, we can even teach skills we are good at to other people in exchange of money. Production essentially is the process of creation of needs satisfying goods and services. That is producing the service or goods for the sake of earning, whereas the other person will consume it. So, one, economic activities are income generating. Two, economic activities are productive. Even consumption is an economic activity. Consuming is also considered as an economic activity. Consumption is, you can't tell non-economic activity. Why, sir? While consuming, nothing you will get for free. You have to pay for it. Money is involved. And of course, when you pay for it, that benefit you are going to pass it to someone. There you are going to make a benefit out of it. So basically, consuming is also a economic activity. See, consumption represents the demand side of economics, the goods and services on which the people will spend their income. Production is organized in response to the demand. So someone is not a mad to produce something which there is no demand for. Imagine someone producing that basic sets. Of course, there are basic sets. There are people who are using basic sets. But you can't produce what you were producing earlier in 2006, 2007, because now it's the time for smartphone. So your consumption also leads to a economic activity. And savings, investment, and wealth. What do you mean by savings, sir? Out of the earning, if you are keeping something for a future needs, those are called as savings. Investment, that is those savings you are going to invest somewhere, that is investment. And by doing all these things, you can create a wealth. So these are the certain characteristics of economic activities. Now, sir, whether a business is an economic activity or a non-economic activity? Business is absolutely economic activity, because imagine someone from morning 8 till 8 doing some business, spending his time, and he is doing in return for nothing. That won't going to happen. That's not going to happen. So business is a economic activity. See, market oriented production, other than the production for self-consumption, represents supply side of economics. Imagine Reliance people, for example, Reliance Trends, the Ambani family, they're producing the clothes for themselves, self-consumption, not economic. It's not to sell. Trends clothes, not to sell to general public. They are producing for themselves. Then it is not called as business at all. So when it is not produced for the self-use, it is produced for the demand side of the economy, then market-oriented production, then you can tell business as a economic activity. It is common to refer to shift from subsistence-driven production towards a market-driven production. That is producing for self. For example, your mom cooking for you people. That is not a business activity. Whereas if she cooks for some other people for the money, for example, she's so good cook, so that you people have the demand from the outside, then you can tell that as an economic activity. For example, let's say your sister is baking you a cake. That is non-economic activity. Whereas if she bakes it to cater the market demand, that is automatically a business. Broader perspective, business may be defined as an economic activity comprised of entire spectrum of activities pertaining to production, distribution, trading of goods or service. So business is not only about production. Business is not only about distribution, or production is not only about trading. Business is about all the three spectrums together. That is production of goods or service, distribution of goods or service, or trading of goods or service. You can understand the business in three layers. One, as a commerce. That is, it includes all economic activity, business, profession, every economic activity. You can go for specific industry. For example, retail industry, e-com industry, real estate industry, steel industry, healthcare industry, automobile industry, like that. There you can go and do a research about the business, or you can understand the business. Or daily occupation, that is basically through the employment, you can understand the business. Now the question comes, sir, what is the difference between business, profession, and employment? We have heard of it. What is the difference between business, profession, or employment? Let's say after becoming chartered accountant, if you start doing any business, any economic activity other than profession and employment, then it is called as business. What do you mean by profession, sir? You will be having specialized knowledge. As a chartered accountant, you will be having specialized knowledge in finance, taxation, auditing, like that. And you pursue that for money. That is, you will do that economic activity by giving service to the clients. Then you are called as a professional, and the work you do is called as profession. And employment, after becoming chartered accountant, if you are going to work for someone, then it is called as employment. See, business, entire spectrum of market oriented activities coming under industry, trade, and commerce. All those things are business. Industry, trade, commerce. Whatever activity you do, all those things are called as business. Whereas profession, independent rendering of services of a specialized nature. CA providing CA service, doctor providing doctor service, engineer providing engineering service, teacher providing teaching service. All these things are there. No, these are your profession. That is, independent rendering of services of specialized nature based on prescribed qualifications under the aegis of professional body that also prescribes a code of conduct. For example, for law, bar council is the one. The bar council is the council of the lawyers. So bar council is the one which gives code of conduct. Whereas for chartered accountants, ICAI, company secretaries, ICSI, those are the institutes. For doctors, AIMS. So these are the medical council. These are the things. That is, professionals are the people who work in their specialized area by considering the code of conduct of their institute. Employment, rendering of services under a contract of employment. If you are providing any service under a contract of employment, then it will be called as employment. If you are providing any service as a contract of employment, under a contract of employment, then you are an employee. That process is called as the relationship between you and your the employer is called as employment. Whereas if you are doing for the agreement other than contract of employment, then you can call it as profession. For example, me teaching as an employee, that is regular employee, then I am in employment. If I am doing it as a freelancer based on batch basis, then it is profession. And the mode of establishment, entrepreneur's decision, and other legal formalities. For example, if you want to start a company, you have to follow Companies Act 2013. If you want to start as a partnership business or LLP, you have to follow accordingly those laws. So how to establish? Entrepreneur should decide, and he should do certain formal legalities. So legal formalities, then it is done. You can start a business. Whereas profession, to start a profession, you should, one, to be a member of that professional body. To start a CA service as a chartered accountant office, you should be a CA, that is member of ICAI. To act as a company secretary, you should be a member of ICSI. To act as a doctor, you should be a member of AIMS. To act as a lawyer, you should be a member of Bar Council. So, and you should have the certificate of practice. Only membership is not going to help you. You should have the certificate of practice also. So membership of a professional body and certificate of practice is enough to start your profession. Whereas to start the employment, all you want is letter of appointment. Once you get the letter of appointment telling that, boss, from this date you are going to join our business, then done. Sources. Sir, what is the motive? Sources. For a business, it's a profit. Whereas for a profession, it is a professional fees. For an employee, it is wages or a salary. Qualification, required qualification to do the business, there is no qualification required. There is no restriction on the qualification to do the business. Of course, in some cases it's there. For example, to run the medical shop, you should be having B Pharma. Like that, certain places it's there, but not everywhere. It's not something like if you want to start something relating to clothes, you should be having a fashion designing qualification, or you should, if you want to do a transportation business, there is no hard and fast rule that you should have a MBA in logistics, nothing like that. You can start a business without any prescribed qualification, but you should be having idea. Whereas for a professional, it should be strictly prescribed. I can't go and act like a doctor. Doctor can't go and act like a CA. CA can't go and act like an engineer, which means there should be a required qualification. And for employment, minimum qualification is required. That's what those people ask for. For example, for accountant work, they will ask for BCom. For a finance team lead, they might ask you should complete chartered accountancy. Like that. So they will restrict the minimum qualification you should have to do this kind of jobs. Ethical guidance. What are the ethics you are going to follow? If you are in a business, whatever ethics you have put on yourself, that itself is ethics. Tata's ethics is different, Reliance ethics is different, Adani ethics are different, like that. Basically, it is ethics of founder's value, what your founders dreamt of. Whereas if you're a professional, then your ethics will be based on your professional codes. Code of ICAI for CS, code of law for lawyers, like that. For an employee, it is employer's code. What your employer asks, you should work in this way, then you should work that way. If you're not liking to work that way, leave and go the organization. That's what he says. So next is investment. For a business, usually you need a substantial investment requirement. You need bit huge investment itself. Whereas as a professional, you need some investment. All you need is one chamber and one office. Whereas employment, you no need any investment unless you became fool by giving someone a money to get your employment. Where second day, when you call him, you will get a tone telling that the person you are trying to reach is not reachable, or the person you are trying to reach is busy. So in the real employment, usually your employers are not going to take any money from you. You no need to invest any money. All is you should wait for starting day where you are going to get a joining bonus. End day, you are going to get a salary. You no need to invest anything. Freedom. In business, you are your own boss. You can do whatever you want, of course, until it is legal. In a professional, of course, you can be your own boss, but also you should keep in mind what your institute tells. In employment, you can't be your own boss. If you be your own boss, your boss will fire you. As simple as that. So, psychology motive. In business, it is economic achievement. In a profession, it is service to the client or a society. In employment, livelihood. I have to get salary. Only so much. Certainty of income, business, you don't know whether you are going to get a money or not. So it is very least. Whereas in a profession, it is quite a bit. That doesn't mean that it is secured. No. Imagine some doctor failed in 20 operations, which other doctors wouldn't have failed. People got to know about this. Now, of course, the patient who go to him are scared. They will stop going to him. They will go for the alternative. Or let's say one lawyer, he literally losing all the cases he takes. Opponent lawyer don't even have to defend. He himself will give the case to that lawyer. That kind of lawyer, automatically client will stop going. But yes, these are very rare cases. So in profession, the certainty of income is quite, it's there. But in employment, it's the most. Until and until you are working in some good organization, in employment, the certainty of income is there. On 30th of every month, or depending upon the company policies, you are going to get credit to your account immediately. Stability of tenure or durability. Till what extent it will be there? Business, you never know. For example, Nokia, how big company it was in 2008, how small company it became in the year 2011. So it is completely uncertain. Professional, quite certain. That is, until you take a retirement on your own, your office will be there. Employment, again, until your age of retirement, your work will be there. Transfer of interest or succession. In business, it is possible. That is, Mukesh Ambani transferring his business to his sons or daughter. It is possible. Imagine some doctor is transferring his doctor certificate, practice certificate to his son, who is engineer, civil engineer. Imagine next day, son come and sit in the office. Someone tell headache. That guy bringing the hammer to break the head and to see what is happening. So that should not happen, no? So transferring of interest or a succession is not possible in profession, but it's possible in employment. Whereas, sorry, business, employment also. Employment also, it is not possible. Okay. In employment also, it is not possible. Imagine someone employed some doctor for their hospital, some doctor for their hospital. Later, the doctor, as I already told you, one professional guy asking his son, who is a civil engineer, to continue as a doctor in the same hospital, which is, of course, not possible. So, transfer of interest in business is possible, but not in professional or a profession or a employment. Now, how the character of business is different from employment and a profession. Business is a job creator, not a job seeker. That is, if you start a business, you are going to create a job for others. You are not going to ask for a job. Provides momentum to economic growth and development. Of course, once you start a business, once you start output of the business, automatically it helps in increase of the GDP, which will help in the economic growth. Investment intensive. Usually, business needs some investment, machinery, inventory, your building, all those requirements will be there. No, so because of that, investment intensive. Sir, we will do e-commerce business. Of course, for e-commerce business, you need software and all. So automatically, it is investment intensive. Gestation and uncertainties. You never know when that seed will become plant. When your business seed will become plant. So it is completely, you don't know how much is the gestation period, as well as how much is, how certain it is. You never know. Systematic, organized, efficiency oriented activity. Business is always a systematic. You cannot do a random business. If you want to do random business, then hardly 1 week you can run. That's it. Organized business are always organized and efficiency oriented. They ask for the efficiency. If you are not efficient enough, your competitors will eat you. That's it. Because the market is cutthroat competition. It is objective oriented or purposeful. Business will be having certain purposes. One is economic objective, that is to increase the sale, might be to increase the profit, to increase the return on investment, to increase the efficiency, to increase economic value addition, all those things, to increase the market share. Those are your economic objectives. You will be having organic objective also. That is, you should survive in the market. You should help towards health of the organization, growth of the organization, diversification capabilities, all those things. Social responsibilities will be there. Companies, now CSR is there. But other than companies also, you might see certain social responsibility, that is giving something back to the society through the community services, education, health, sanitation, like that. legal, ethical, and environmental requirement. That is following the law. If law is not there, you doing a ethical business. And environmental, that is protecting environment. Now it's all about protecting environment. That is one of the major objective of all the organizations. They take a pride in protecting the environment. For example, you might have seen classmate notebooks. Behind that, they will give this is recycled paper. You might have seen Mama Earth telling that they are going to plant some trees and all. So these are certain objectives of the organization. So there are basically four objective oriented, four objectives you can tell. One is economic objective, two organic objective, three social responsibilities, four legal, ethical, and environmental objective. I repeat, economic objective, organic objective, social responsibilities, legal, ethical, and environmental. Now, there are different forms of business organization. What are they? That we'll see. Before that, we'll see what are the important notes about a business ownership. What business ownership is? That is you owning a business. Business ownership is bundle of right. Once you start a business, once you invest, then automatically you will become a owner of all those assets. You will become a owner of all those intellectual properties. You will become the owner of, you will have that right towards all those business assets, whatever you have. So that is business ownership is bundle of rights. Ownership is bundle of rights. These rights accrue because a person has invested money in it. First, such right is the titler exclusiveness. That is, for example, other than Reliance people, no one can use the name Reliance. If you own a book, no one else can claim its ownership because you own it. You have invested in it. Business may be owned singly or jointly. That is, as a one owner, you can own a business, start a business, or you can start a business along with some other few people. Business may be organized as a proprietary, that is sole proprietor, or a corporate, that is separate existence, separate artificial person. You can start business as me and business both are same, or you can start business as it is a artificial person. All I am doing is running the business. I am not the business. All I am doing is running the business. If something happens to the Reliance, nothing will happen to the Ambani family until they are not involved, because that is artificial person. So business you can start as a proprietary or you can start as a corporate concern. Forms of the business organization, sole proprietor. What are the features? Autonomy of being one's own boss. If you are only one owner, then you are the owner. You don't have to listen to anyone. Sole provider of capital. Capital, as you are the only owner, then who will bring you the capital? You are the only one who you should bring the capital. Sir, what about the people who do the investment? Other people? Then that is not called as capital. That will be called as either investment or a loan. Visibility of the owner and personalized services. That is, the people who deal with, they will be knowing who is the owner of that business, who are the real owners. Sole bearer of risk. If you are alone put a capital, then of course you only the one who should bear the whole risk. And unlimited liability. That is, if your business assets are not enough to meet the liabilities of the business, then you should bring your own asset to repay the loans of the business or liabilities of the business. So sole proprietor comes up with unlimited liability. Fate as a going concern. Sole proprietor entities going concern status depends on the owner's personal health and lifespan. So sole proprietor, until you are healthy, until you are alive, you can do the business. Once you are gone, your business is gone. That doesn't mean that succession is not possible. Succession is possible, but as a person, it's not your business now. For example, let's say there is A. A died. His son is there, A. A take over the business of A. Now that business is not of A. That business is of A, which means A's business went with A. Now that is the new business of A. Of course, he might be continuing, but you can't tell he is the proprietor. A is the proprietor. No. Now A is the proprietor. Succession of ownership by will. That is, whoever the sole proprietor tells he is after me, then that person is future proprietor, owner. If will is not there, then law will tell who will take over which business, depending on inheritance. Next kind of business is Hindu undivided family, HUF businesses. This is formed by birth in Hindu. Hindu includes, this is very important, Hindu includes Buddha, Jain and Sikh. You can't tell Buddha, Jain and Sikh are not Hindu. They can't start a Hindu undivided family. No. Hindu undivided family, here Hindu includes Buddha, Jain and Sikh. It is family pool of resources. Whole family resource is the business resource. Social capital through family investment. That is, you are going to bring that family into the business, which means you are not only investing the financial capital, you are also investing social capital. The family members are automatically become co-owners, also called as co-partners by the birth. Once you take a birth in that Hindu undivided family, then automatically you will become co-owner, co-partner in that business. Here, decision making is very quick. Imagine everyone sitting in the table, having food. They want to bring certain change in the business. Someone proposed it. Everyone liked it. Everyone said, okay, okay, okay. Business decision is done. Company, it won't happen like that. You have to call the board meeting. Prior that, you have to issue the notice. They have to come. So basically, decision making here is quick. But compared to this, of course, sole proprietor decision making is really quick. Compared to this, sole proprietor decision making is really quick. Because in his brains, he will think, implement if you want to. Here, they can't do that. Here, they should ask the other people. But of course, they can ask easily. It's not something like you should call for the board meeting and all. Unlimited liability of the Karta. Karta's liability in the HUF is unlimited. Who is Karta? Head of HUF is called as Karta. Fate as a going concern. See, usually it will go for 2 to 3 generations. Later, the family gets divided. You might have seen in serials and all. So, few family businesses last beyond 3rd generation, but not always. Often, family feuds result in business splits. Succession of ownership, it is also by will or operation of law of inheritance. Next kind of business is partnership. That is the business which is entered through agreement. Sir, written agreement or oral agreement, anything is fine. Partnership agreement can be written or oral. If it is written, it is called as partnership deed. So features, one, there will be agreement. Either it can be a written agreement or a oral agreement. 2 or more persons. So to form a partnership, at least 2 people should be there. Maximum 50 as per Companies Act 2013. Profit sharing. So the main objective behind this is doing a business and sharing a profit in their profit sharing ratio, agreed ratio. Sir, what if it's not there? You don't know. Capital ratio, no. No. It is equal. You should share the profits equally. Sir, why you are teaching accounts and law now? I'm just refreshing your memory. Business objective quite wide. Here, if 2 or more people are coming together, then your objective is wide. Mutual agency. That is, one person is liable through the act of the other person. Unlimited liability. Until it is a limited liability partnership, the partner's liability is unlimited, which means if the business assets are not enough, partners should bring their own assets to meet the liability of the business in their agreed ratio. Fate as a going concern. Since partnership arises out of a contract, it also ceases in the same way. A partner may serve a notice of severance to the firm and partnership comes to an end. Partner started a business through contract. So now if you want to stop the business, just give the notice. And to stop the business, automatically it will stop the business after every person agrees. Succession of ownership. Ownership is not easily transferable. A new partner can be admitted only if the other partners consent. That is, if the other partner agrees, then only you can take the other partner as a new partner. Without their permission, you can't. Next is limited liability partnership. That is, ownership is not easily transferable. Your ownership are not easily transferable. New partner can be admitted only if the other partners consent. Incorporation is mandatory. That is, agreement is mandatory, as well as going through some legal requirements is mandatory. It is a legal entity separate from its partners. That's why it's called as LLP. That is, business is separate, partners are separate. Just like a company, it is nothing but between company and a partnership. It is not that liberal as a partnership. It is not as strict as a company. So it is somewhere in between. Sir, minimum partners in LLP 2, maximum no limit. Who is the authority who looks after the administration of LLP? ROC, that is register of company itself, E only. There will be a statutory compliances, and in this, liability of partners will be limited. Every partner of LLP is only agent of firm. That is, there is no mutual agency. Act of one partner will not bind the other partner. Act of one partner will bind the firm, not the other partner. So every partner of LLP is only agent of a firm. Company form of business organization is a flag bearer for the corporate businesses. For a corporate business, company is the one who bears the flag. I mean, the corporate means first thing will strike to your head is company. Company indeed a body corporate, which means separate legal, having existence of independent of all its members, which means company can hold assets in its own name, company can take a liability on its own name, company can enter into a contract on its own name, like that. It exists in the contemplation of law as a distinct name, address, register office, and identification number. Just like how you people will be having the Aadhaar number, companies will be having corporate identity number. As you people have your name, same way company will be having distinct name. As you people will be having your own address, company will be having their own address. That is registered office of the company. There are two kind of company, broadly you can tell, private company and public company. Sir, public company means government company? Absolutely no. Public company means not a government company. Remember, public company and government company both are different. What do you mean by government company, sir? Government company is a kind of public company in which at least 51% of shares are held by government, either state government or central government or together by state and central government. So government company and public company are not same. Sir, then what is public company? Public company is a company which doesn't have maximum limit for the members. That's it. Whereas your private company is having a maximum limit for the members, that is 200. And in your law, you should go through those provisions and all. Who and all are not counted in the 200. I'm feeling that might come in your examination. I never know. I don't know. And you people also will never know. But law, it might come in the law. Just today. Before sleeping, after this class, just go through it once. Okay. I'm talking about that employees won't be counted. All those things. So, sir, features. Minimum number of members, private company 2, public company 7. So to start a private company, all you need is a 2-member. To start a public company, all you need is a 7-member minimum. Maximum, private company 200, public company no limit. Transferability of shares restriction. In private company, the share restriction, transferability of share, that restriction will be there. Whereas in public company, it won't be there. Your private company definition starts with that, which has a restriction relating to transferability, membership, like that. So the shares may be freely tradable on stock exchange via listing, that is of public company. Okay. Listing of shares of a public company adds to their liquidity so that investor may encash the shares whenever is needed. But transferability of private limited company shares are difficult. It is restrictive in nature. Minimum number 2 and 3. Directors. Minimum member is also 2. Minimum director is also 2. Their minimum member is 7. Directors are 3. Remember. OPC is kind of private company. In that, member is restricted to 1 and he should appoint one more nominal person. If something happens to him, that nominal person will become member. Committees. Private companies are exempted from constituting such committee of the board of directors as audit committee, CSR committee, stakeholders committee, nomination and remuneration committee. All those committees are not required to be done by the private companies. But these committees should be done by the public companies. But not all public companies. They have capital clause, they have turnover clause and all for unlisted company. Listed company, yes. Listed companies should form all this kind of committees. Start of business. Private company can start its business upon its incorporation, whereas a public company is required to obtain a certificate of commencement of business in addition to the certificate of incorporation. We are done with chapter number 1. Hope you people understood. Hope you people understood. Anyone? Any doubt? Yes. Hello. Anyone is having any doubt? Shall we proceed? Shall we proceed? Yes. Yes, yes. It's 7:40. We are starting from 7:41. Exact 7:41. Chapter number 2. Very important. Very, very important. It's all about business environment. Yes. Business environment. Sir, what do you mean by business environment? Business environment means environment in which the business works. That's it. What do you mean by business environment? Business environment means in an environment in which the business works. What is environment, sir? Environment is something which consists of many factors. Environment is something which consists of many factors. And the business which works in that environment is called as business environment. See, the environment includes factors outside the firm as well as inside the firm. The environment includes factors outside the firm which can lead to the opportunities or threats. And also, see, remember one thing. In environment, you can tell external environment, internal environment. External environment will provide you opportunity and threat, whereas internal environment will provide you strength and weakness. Remember, external environment, opportunity and threat. Internal environment, strength and weakness. Strength is what you have. Weakness is what is stopping you. Whereas opportunity is what are the different opportunities you have in the environment. Whereas threat is what are the threats to your business in the environment. See, the environment includes factors outside the firm which can lead to the opportunities for or threat to the firm. Although there are many factors, the most important of the factor are socio-economic, technological, supplier, competitor, and government. These are the important factors in the business environment. Which are they, sir? Socio-economic, technological, supplier, competitor, government. Socio-economic, technological, supplier, competitor, and environment. Business environment includes suppliers, customers, competitors, creditors, government. Characteristics of business environment. It is complex. It is complex, which means the environment consists of number of factors, events, condition, and influences arising from a different sources. It is difficult to comprehend at once the factor constituting a given environment. All in all, environment is complex, that's somewhat easier to understand part. For example, if you are thinking from the point of view of customer, you also should think from the point of view of government. You should also think from the point of view of environment. You should also think from the point of view of supplier. So you can't think from one angle. So this activity or this environment is complex in nature. It is not that simple. It is dynamic in nature. Environment is dynamic in nature, which means constantly changing. Only constant in business is change. That is, change is the only constant thing in business. The environment is constantly changing in nature. Due to the many and varied influences operating, there are dynamism in the environment causing it continuous change in its shape and character. For example, 10 years down the line, 15 years down the line, no one knew that online may you can buy whatever you want. At least no one knew that plants and all you can buy through online. Now that is also possible. Literally milk you can buy through online. Vegetables you can buy through online. Fresh vegetables. Which means business keeps on changing. It is dynamic in nature. Business environment. Multifaceted. That is, it has many different things, perceptions. The one person, if he thinks as an opportunity, that will be threat to the other person. For example, improvement in the technology. It is opportunity for the person who is in technological business. It is threat to the person who is in the traditional business. That is, what shape and character an environment assumes depends on the perception of the observer. A particular change in the environment or new development may be viewed differently by different observers. This is frequently seen when the some development is welcomed as an opportunity by one company, while the another company perceives it as a threat. Far-reaching impact. Some change in environment will have the far reach. For example, in the year 2016, Geo came. That is just the improvement in telecom industry. But literally, it changed whole business dynamic. Earlier, no one used to watch the YouTube. Now, everyone will spend at least 3 hours a day. Earlier, people used to use Facebook. Like, for example, the data what they took, 2 GB data per month, not per day. What you people use. Upon that, you people get additional recharge. That was not even an option. Now, what you get for additional recharge, for example, 30 GB for around 180 rupees. Earlier, for 180 rupees, it is 1 GB, 2 GB. So, last day, it is going to empty. That time, people used to scroll. But now, Instagram, you people, though, at least 10 hours you are scrolling. Your parents asking what you are doing. You people telling, going through the study material, what faculty sent. What study material? Instagram. Please, exams are not too far. So please stay away from the social media for some time. So Geo is just a improvement in telecom industry, but it has the impact on all the industry. For example, online classes, YouTube, streaming channels, all those things. Whole business things has been changed in India because of improvement in telecom. So it is far-reaching impact. So what are the characteristics of business environment? 1, it is complex. 2, it is dynamic. 3, it is multifaceted. 4, it is far-reaching impact. Importance of the business environment. Why you want to know about business environment? To ascertain opportunities and threat, you should be having the knowledge of business environment. It gives the direction for the growth. It will help you in continuous learning, image building, and meeting competition. That is, it will show you what are the opportunities are there in the environment, what are the threats are there in the environment. It gives the direction for growth by showing you the opportunities. You will learn continuously what is happening in the business. It will, if you are that changing, like along with the change in the environment, if you are also changing, then that builds you a good image. Whereas you can meet the competition using the opportunities and threats, using the information about opportunities and threat, and to tackle that using your strength and overcoming your weaknesses. Through that, you can meet the competition. Relationship between organization and environment. See, environment is a broader in nature. Organization is smaller when compared to environment, but exchange of information takes place between organization and environment. That is, environment information is nothing but collection of all the organization's information. What is happening in the environment, that will help the organization to formulate their policies. All the business, all the organization policies together will become the information for the environment as a whole. That is, the organization scans the external environment variable elements, their behavior changes, from which it generates important information and uses it for the planning, decision making, and control purpose. So exchange of information happen between organization and an environment. Next is exchange of resources. Exchange of resources. That is, you will get a different resources, man, material, and money through the environment. Through investors, you will get a money. Through the different HR things, you will get employees, manpower, material you will get through different suppliers who work in an environment, your business environment. Using that, you are going to produce final products, which means you are giving final product to the environment. So basically, it is exchange of resources. The organization receives input, that is finance, material, manpower, equipment, etc., from the external environment through contractual and other arrangement. The resources are often categorized as 5 M's, that is men, money, method, that is how to do the business, machine, and material. Next is exchange of influence and power. The external environment holds the considerable power over the organization, because organization, collection of organization is business environment. So business environment has more power compared to organization, both by virtue of its being more inclusive as well as by virtue of its command over resources, information, and other input. It offers a range of opportunities, incentives, and reward to the one hand and a set of constraint or threat to the other hand. That is, when the environment offers opportunity to that one business, then it will be a threat to the other business. Next, environmental influence on business. However, environment is going to influence you. Environment factors or constraint are largely, if not totally, external and beyond the control of individual industrial enterprise and their management. That is, as a business, you can't control whole industry, but sometimes it is. For example, Geo controlling whole telecom industry for a period. Now, online streaming things, Geo Cinema is controlling online streaming things, like that. So environment factors or constraint are largely, if not totally external, beyond the control of individual industrial enterprise and their management. These are essentially the givers within which the firm and their management must operate. In a specific country, they vary often greatly from country to country. So you cannot control the environment as a whole. To some extent you might, but at the end of the day, environment is the one which controls you. Business functions as a part of broader environment. So business is a part of broader environment. The input in the form of human, physical, financial, and other related resources are drawn from the environment. It is not internal. The employees, everything, it is drawn from the outside only. Business convert these resources through various processes into outputs of product and or services. So using those resources, business is going to produce outputs. How to understand environmental influences? Sir, how our environment will influence our business? How to understand that? First step is initial view of nature. What environment we are in, how uncertain it is, how certain it is, how many, like how static it is, how quickly it change. All those information you should consider first. Second, whether it is complex or comprehend, like that. Second, that is auditing the environmental influences. That is, those influences, what are there in the environment, how they are going to affect your businesses, auditing that. Third is exploiting the consideration of immediate and explicit consideration of the immediate environment of the organization. That is immediate. For example, your Zomato, they were in the food delivery. Their immediate environment was grocery delivery. They come up with Zepto. Like that. That is, along with your business, you should also concentrate, along with your environment, you should also concentrate the closer environment. Because, for example, let's say telecom industry, no more 5G, no more 4G, no more 3G. For 2 months, it is only 2G. And that too, 20 MB per day for all Indians. Now, it is not the environment of food delivery or Flipkart or grocery delivery. But of course, their industry is going to get affected by that. So they should have the close look of that also. So first you should know your environment. Two, you should audit your environment, how to, what are the strength, opportunities and all. Third, you should keep an eye on the closer environment. Now the question comes, sir, why you want to do that? Why the environmental analysis? When the company does not react to the demand of the environment by changing its strategy, the result is declining performance of the company in the market. That's what happened with Nokia. They had a really good market. People came up with the Android, but they failed to encash that. Automatically, the company went. So if you don't react to the environmental changes, then you will lose your performance. Business cannot work in isolation. Isolate from its environment. No, it is part of its environment. So environment is a broader thing. In that, you are just a small organization. So you should work in hand with your environment. What are the uses? From environmental analysis, strategists get time to anticipate opportunities and to plan optimal responses to these opportunities. So when you analyze your environment, you will get an idea, not a clear picture. To some extent, you will get an idea what might happen in the environment, what are the trend, what are the events are going to happen. Accordingly, you can do a strategies. It also helps the strategists to develop an early warning system to prevent threats or to develop a strategies to encash the opportunities. It is clear that because of the difficulty to assess the future, not all the future and events can be anticipated. Of course, you cannot anticipate all the future events, but to some extent you can. To the extent that some or the most of this outcome of the environment is anticipated by the analysis, managerial decisions are likely to be better. Instead of everything coming as a shock, out of 10 things, 2 things coming as a shock, 8 things coming as an anticipated one is better. Yes or no? So it is always better to anticipate the things instead of waiting for the result and be ready for that. So the managers can concentrate on those few crucial events instead of having deal with, see, it should not be something like every day is a challenging. Certain things should go in hand so that other things you can concentrate on. So one, purpose or goals of environmental analysis. One, understanding of current and potential change taking place in the environment. You can understand what are the changes happening in the environment. Inputs for strategic decision making. Inputs for strategic decision making. To make the strategies, your environmental analysis is going to give you idea. Facilitating faster strategic thinking in organization. For example, self-driven cars. They need an internet. The 5G news might have helped them in making the strategies better. Like that it is. Facilitate, foster strategic thinking in organization. Environmental scanning. Now the question comes, what do you mean by environmental scanning? Environmental scanning can be defined as the process by which organization monitor their relevant environment to identify the opportunities and threats affecting their business for the purpose of taking strategic decision. That is scanning. Ing means verb it is, which means process. It's a process by which organization monitor their environment, that is relevant environment, to identify the opportunities and threats so that they can formulate a strategy. It is the process of gathering information regarding company's environment, analyzing and forecasting the impact of all predictable environment. It helps the manager to decide the future path of the organization. The factor which are outcome of the environmental scanning. One is events. You will get to know about the events. That is what might happen in future. What are the changes or what are the happenings in our organization? Or sorry, what are the happenings in our environment? That is events. The important specific occurrence taking place in different environmental sectors. For example, telecom industry, 5G, smartphone industry, the better processors, like that. Events are certain happening in the internal and external organization environment, which can be observed and tracked. So basically, it is a occurrence of certain things in different environment, closely held environment. Trends. That is, what is the trend right now? What is the trend of the customers? What is the trend of the supplier? What is the trend of the whole environment? Trends are the general tendencies. That is what is happening together, what people are doing, all of them. are the course of action along which events takes place. Trends are grouping of similar or related events that tend to move in a given direction. Increasing or decreasing in the strength of frequency or observation usually suggest a pattern change in particular area. For example, Indians started using iPhone. Apple people bought the production plant to India. As simple as that. So trend was increase in the usage of the iPhone. Automatically, the result was Apple people scanning the environment of Indian economy or an Indian environment and bringing their production plant. Issues, that is, along with the events and trends, what are the concerns your organization should face? Issues are the current concerns that arise in response to the events and trends. Identifying an emerging issue is more difficult because you don't know what is going to happen. Emerging issue starts with value shift, change in how an issue is viewed. Expectation, that is what you are expecting from the environment, as well as what the group of people in the environment expecting from you. What you are expecting and what the group of people in the environment expecting from you. For example, mobile industry. Now people expect good camera, good batteries, etc. So that is their expectations. Expectations are the demand made by the interested group in the light of their concern for the issues. Components of the business environment, internal environment and external environment. That is, internal environment means what is there inside your organization. External environment means outside your organization. Internal environment is composed of multiple elements existing within the organization, including management, current employees, corporate culture. Corporate culture means what, sir? The culture what your organization believes in. The ethics of the organization, the values of the organization in which it believes in. Internal environment is composed of multiple elements. That is, one is management, because management is internal. Employees are internal. Corporate culture, that is your corporate culture, of course it should be internal. Internal environment is the condition, people, events and factors within an organization that influence the activities of choices, particularly the behavior of the employees. Factors that are frequently considered to be part of internal environment also includes the organization mission statement, leadership style and organization culture. That is not much important. Remember, internal environment means what is internal to your organization. Basically, management, employees, corporate culture. External environment, factors that happens outside the business. Factors that happens outside the business are known as external factors or influences. These will affect the internal functions of the business and also objective of business. For example, semiconductor. Shortage of semiconductor automatically affected all the electronic gadget industry, all the electronic gadget organizations. Semiconductor and this electronic gadget, both are different, but still they work in the same environment. So that factor of shortage in semiconductor affected the electronic gadget industry. So that is external factors affecting your internal things. Types of external environment, you can tell microeconomy, macroeconomy. That micro and macro we'll see later. Environmental influences of the organization, strength, weakness, opportunity, threat. Strength, that is your capability of doing something, which will give you strategic advantage over others, competitor, which means the edge over your competitor, that is strength. Weakness, that is your limitation, your constraint, which will give you strategic disadvantages. Opportunities, that is what your business environment is throwing at you. An opportunity is a favorable condition in the organization environment. Threat, that is unfavorable condition in the business environment. Sir, what we should do? We should make sure that we will reduce the threat using our strength. We will reduce the stress. We will reduce the threat using our strength, and we will encash the opportunities by reducing our weaknesses. That is, you should overcome your weakness and threat through the strength to encash the opportunities. That is called as SWOT analysis. SWOT analysis. What you will do in SWOT analysis, sir? Using the strength, we are going to minimize the impact of the weakness, capitalize the opportunities, neutralize the threat. What we are going to do? Using the strength, we are going to minimize the impact of the weakness. We are going to capitalize the opportunities. We are going to neutralize the threat. That threat is not going to affect our organization like that. What are micro and macro environment now? Micro environment is related to small area or immediate periphery of an organization. Micro environment influences organization regular or directly. Very small environment. Not a nation as a whole. GDP, all those things come in macro environment. Micro environment is basically your customers, day to day, organization, your organization, that is your owner, board of directors, employment, etc. Market, that is in which market you are operating, price sensitive market, what is the maturity of the market, because once the product reaches its maturity level, the new product will enter the market, that one. And cost structure of the market. Intermediaries, that is who acts as link between your link in your supply chain, that is from your supplier to you, someone acts between as an intermediary. From you to your customer, someone will act as an intermediary. One who act as a bridge between manufacturer and a marketer. Competitors, that is other entities that competes for a resource as well as market with you. Suppliers, that is suppliers with their bargaining power affect the cost structure. For example, there is only one supplier. For certain goods, there is one supplier. Then whatever the price they tell, no, you have to bring it. You don't have option. So that is what the supplier is. Macro environment is a broader dimension. It mainly consists of economic, technological, political, legal, socio-cultural factors. Which are the macro environment things? Economic, that is government and all. Technological development as a whole. Political, legal, socio-cultural factors. Macro environment consists of demography, that is population size, population age, population income distribution, all those things based on demography. You can't go and sell the super bikes in the area where the demography is of a people who are age of 80 plus. Yes, of course, certain exceptions will be there, but you can't do a business by trusting the exceptions. So demographic, you should see all those things. Let's say there are no kids or there are only few kids in the area. In that area, you are starting a school. Absolutely no use. So these are macro environment. You should keep an eye on macro environment. Demographic, that is population size, income distribution, etc. Political, that is government policies or legal laws. Economic, that is interest rate might be, level of disposable income, all those things. Imagine people in your environment are only in the mood of saving. They are not in the mood of spending it. Then automatically no one will buy your product, no? So those are the factors which will affect. Interest rate, the less and less the interest rate, the less and less the cost of capital, the more and more the businesses will be. Next is social. Traditions or belief or culture. That is what those area or what those your demographic people believe in. For example, market for beef is not available in India, but it might be there in the foreign. So you should be knowing what social beliefs are. Next is technological. What are the opportunities arising out of technology, or what are the uncertainties or risk arising out of technology? Might be because of artificial intelligence. Some organization might be having the opportunities. The same kind, the other organization will be having the threats. Government, that is what are the changes in policies and approach towards development of the country. Legal, that is introduction of a new law. Always dangerous. But now it is become much more liberal and liberal. That will be favorable. You have to think a law in two ways. One, if it is restrictive in nature, that is threat. If it is liberal in nature, then it is your opportunities. Global, that is change in the world political climate will affect your environment also. So elements of microeconomics, we already saw customer and consumers. What are customers and consumers? The people who are ready to spend for your product. According to the Peter Drucker, the main aim of business is to create and retain the customer. One, you should create customers. They are not your customer set. You should do the marketing. You should do anything. You should give them a quality service, and you should make sure that they are your customers. One customer, once they become customer, that is not done. It's not something like they will sign and give. Here onwards, I'm going to buy your product. I'm going to take service from you. You should make sure that you will do the changes in your business. You will do the changes in your product. You will do the changes in your service, which will help you in retaining the customers. The marketer has to closely monitor and analyze changes in customer taste, consumer taste and preference, and their buying habits. That's what the Nokia people failed in. They failed to understand the customer wants change, the consumer needs change. They sticked into their own thing, and you know what happened later. Who are customers or consumers? All you have to see is one, who are your customers and consumers? Might be potential also. What benefits they are looking for, what they are expecting from you, what are their buying pattern is, what they prefer the more. Next is competitor. Competitor is the other business which will compete with you for the consumers as well as for the resource for the market. Competitor are the other businesses entities that compete for the resources as well as markets. Following are the few major questions that may arise, may be addressed for analyzing a competition. One is, who are your competitors? What are the business objectives and strategies of your competitor? Who are the most aggressive and powerful competitor? You should keep the eye on them because they will change the whole market completely. Competition may be direct or indirect. Direct competition is between the organization which are same in business activity. For example, competition between Flipkart and Amazon, direct. Selling the same kind of products which are related to each other are exactly the same. So when direct competition is something, competition when the organization are doing the similar activity, same activity. Next is organization. Organization are made up of various group of people who work towards common goal. Who are they? Owners, board of directors, employees. These are the three people who makes the organization. Owners, board of directors and employees. Next is market. Market is larger than customer. Customers together make a market. People who buy goods are customers, while all those to whom the business believes it can sell are the market. Which means customers plus potential customers makes you a market. The marketer should study the trend and development and key success factors of the market is operating. Important issues he should see is cost structure of the market, the price sensitivity of the market, whether they are too price sensitive or whether they are okay with spending the money, all those things. Technological structure of the market, the existing distribution system of the market, is the market mature? Supplier. Suppliers form an important component of the microenvironment. They provide a raw material, equipment, service, and so on. Large companies rely on hundreds of suppliers to maintain their production. Supplier with their own bargaining power are ones who can dominate the prices, affect the cost structure, etc. Next are intermediaries. That is, intermediaries exerts a considerable influence on the business organization. They can also be considered as the major determining force in the business. In many cases, the consumer are not aware of the manufacturer of the product they buy. They buy a product from the local retailer, big department stores. For example, whatever you get, the earphones, the earpods, etc. will get no. Almost many companies, other than who they claim made in India, all of them are imported from China. That too, a single company will do a production for them. All they do is a branding of these people. The watches also, they will produce. The brands in India will bring and put a brand of their name. So these are the intermediaries who will help the organization. Elements, demographic, you should see the area and all. What are the demographic things which business should see? Population size, geographic distribution, ethnic matrix, income, ethnic mix, income distribution. Next is economic environment. Factors affect is capitalism, socialism, mixed economy. What is capitalism? Private. Socialism, government. Mixed economy, that is mixture of capitalism as well as socialism. And you should, economic condition are factors also you should consider. That is your forex reserve, your capital, inflation, unemployment level, interest rate, all those factors. Next is economic policies. That is what your government brings policies relating to industrial policy might be, fiscal policy might be. Fiscal means government spendings. Taxation, you can tell. Monetary policy, that is giving the loan, interest, free loan, like that. Foreign investment policy, that is how much of foreigners can invest, whether they can invest in your business or not, for how long they can invest, all those things. Export import policy. Next is political legal environment. So we saw economic environment, demographic environment. Now we are going for political legal environment. One, government. Certain government will be having different ideology, so that will affect your business. Legal, the more and more the legal restrictions, the less and less ease of doing business. Political, certain political wave will change your whole business. Socio-cultural, that is societal concerns. See, some of the important factors and influence operating in a social cultural environment are social concerns such as role of business in society, environment pollution, corruption, use of mass media, consumerism. Social attitudes and values such as expectations of society from business, social customs, beliefs, ritual, practice, changing lifestyle, etc. Family structure and changes in it. Role of women in society. All these are certain factors relating to socio-cultural environment, educational level. See, you should go through all these things. These notes, I will share with the classes. They will share with you people. Okay. If anyone who is not having contact of the classes, you can drop me a text to this number 7975573718. I'm going to send you a notes. Okay. Just drop me a text to this message, and if you have any doubts also, you can ask me through this. Please avoid calling, drop a text, because I will be having classes, then I can't attend your calls. Technological environment. The following factors are to be considered while analyzing a technological environment. The pull of technological change, that is what change is happening, opportunities arising out of technological innovation, risk and uncertainty due to technological development, role of R&D in the country and government's R&D budget, research and development. Next, you are going to see global environment, that is potential positive and negative impact of the significant international event such as sports meet, terrorist attack, etc. Identification of both important emerging global market and global market are changing, difference between cultural and institutional attributes, etc. That thing you just go through. So 6 factors, which are there, sir? One, your demographic environment. 2, economic environment. 3, political legal environment. 4, socio-cultural environment. 5, technological environment. 6, global environment. All these are your macro environment factors. Next is pestal analysis. What do you mean by pestal, sir? P stands for political, E stands for economic, S stands for social, T stands for technological, L stands for legal, E stands for environmental factors. See, pestal analysis involves identifying the political, economic, socio-cultural, technological, legal, and environmental influence of the organization, and providing the way of scanning the environment influence that have affected or likely to affect the organization and its policy. Key factors. One is political. Here you are going to check what these political factors, how they are going to affect us, and to what extent it is going to affect the government, and to what extent the government is going to affect our business. That is political. 2 is economical. That is the economic factors, what we have say, interest rate, inflation, all those things, how they are going to affect our business. Next is social factor. That is how the demand is there for our product in the society. Technological factors, that is how the technology is helping the new organization to come up with, or it is showing a threat to our organization or showing an opportunity to our organization, those things. Legal factors, as I already told, in which environment we operate, whether it is too strict or too lenient. Too lenient is also not good, too strict is also not good. Environmental factors, that is your tourism, farm, insurance, all those things. Environmental factors. See here, they have given pestle matrix. In this, political involves what and all? Stability. Political stability is there, it's good for the business. Good political principles and ideology, it's good. Current and future taxation policy, that matters. Regulatory body processes, government policies, government terms and chances, like that. There are many things. You just go through this 6 matrix. Strategic response to the environment. Internal strategic responses. 3 classes of internal responses that business can offer as described below. Administrative responses. These include formation or clarification of the organization's mission, the development of the objectives, policies, and budgets, of the creation of scanning unit. These responses can be either proactive or reactive and are aimed at defining the organization purpose and key task in relationship to particular environment. So, one, you can respond through administrative. That is, you are developing your policies, you are developing your strategies, you are developing your missions according to the environment, you are making the policies, etc. Through administrative, you can respond. To competitive response. Competitive response to the environment typically are associated with for profit firms but can also apply to the not-for-profit organization. Such actions seek to enhance the organization performance by establishing a competitive advantage over its rivals. If a business is able to deliver a competitive advantage which is unique from its competitors, which is valued by the customers, and which is difficult to initiate, then the business shall be able to thrive through the environment. Basically, competitive response means you should make sure that you create competitive advantage over you create a competitive advantage over your competitors. That's how you are going to respond through competition, not through administration, through competition. Collective response. That is, when 2 or more businesses come together to benefit from each other's advantages, it is termed as collective responses. Collective responses help control interdependency among the organization and include such method as bargaining, contracting, co-opting, creating joint venture, federation, etc. So, if you find that, okay, alone I can't fight, alone I can't respond to the changes in this, then you will go for collective response. Collective response, what happens? 2 or more organization comes together to compete with the other. For example, Vodafone Idea coming together to compete with the Airtel and Jio. This is internal strategic responses, which are the administrative response, competitive response, collective response. Now, holistic strategic response. In holistic approach, the business need to look at the organization wide setup with ample understanding of the competitor and all other environment factors, macro as well as micro. Approach, least resistance. Some business just manage to survive by way of coping with their changing external environment. Their simple goal, maintaining units. They are passive in their behavior and are solely guided by the signals of the external environment, which means you become least resistance, which means whatever the change is happening, whatever the change is happening, you are just managing to survive. Environment changes a bit, you are okay with changing. Environment change the other way, you are okay with changing. You are least resist towards changes in environment. Proceed with caution. This is the business that take an intelligent interest to adapt the changing external environment. They seek to monitor the change in the environment, analyze their impact on their own goal and activities, and translate their assessment in terms of specified strategies, survival, stability, and strength. That is, here what you are going to do, you are carefully taking the steps. That is, proceed with caution. You are going to check what is happening in the environment, whether that environment changes is good for us or not good for us. All those analysis you will do, and accordingly will formulate the policies. Next is dynamic response. Business that regard the external environment forces as partially manageable and controllable by their action. Their feedback system are highly dynamic and powerful. They not merely recognize the word of threat, they convert the threat into opportunities. These are the kind of responses what you will give to the external environment that is dynamic in nature. It is showing you a threat, but you will make sure that the threat will become your opportunity. That is your dynamic response. So literally strategic response are of two types. One, internal strategic response. Two, holistic response. Strategic internal response are of three: administrative response, competitive response, collective response, ACC. Administrative response, competitive response, collective response. Whereas holistic is of also three. One, least resistance. That is, however the environment is going, you are also going with the flow. That's it. Least resistance. To proceed with caution. Here you are scanning your organization. You are understanding what are the changes which are going to affect your organization, and you are going to take steps accordingly. Dynamic is that is threat to your organization, but you will go in the other way and you will make sure that the threat will become your opportunity. This is all about second chapter. Hope you people understood. Hope you people understood. And if you people understood, shall we proceed to the next chapter, please? See, in the third chapter, that CMO, CEO, all those CFO, all those things are there, no? Kindly go through it and kindly go through who are CEOs, all those things. Okay? That I'm not going to revise now. Just go through those things on your own. It's 8:26. We are starting sharp at 8:28. Sure, I will start. Chapter 4. I'm starting with chapter 4. That is government policies for business growth. Policy framework in India, a historical sketch. See, what this chapter says is what are the different policies bought by the government for the business growth to help the growth of the business. See, these policies are not new things. This is there from ancient India. How, sir? In India, a lot of discourses, research, and experiments on public policy used to take place in the age-old universities of Takshashila, Vaishali, and Nalanda. That time only, long back only, they used to do the experiment, research, and all relating to how to do the public policies. What are the different public policies should be done? During the time of Emperor Chandragupta Maurya, the great intellectual guru of the emperor, Chanakya, outlined the public policy of the state. He authored the book Arthashastra, a conceptual framework of state craft and public policy. So later in the time of Chandragupta Maurya, Chanakya, he came up with book called Arthashastra, which is relating to your state craft and public policy. During the time when Ashoka, the great, ruled Magad, he introduced policy of peace and harmony. So he also bought a public policy called as policy of peace and harmony. Guptas defined various policies like tax, trades, and warfare. So Guptas bought policies relating to taxes, trade, and warfare. In Delhi Sultanate, Alauddin Khilji introduced the stringent tax reform, whereas during the time of Akbar the Great, the land reform were introduced under the leadership of Todarmal. Later, what happened? British came. British came, and whether they stopped the policy? No. India under the British. Economic policies under the colonial rule were so designed as to benefit the foreign rulers. So they formulated the policy in such a way that which will help them rule. Okay. Next, Dadabhai Naoroji, through his seminal work, his book Poverty and Un-British Rule in India, drew attention to the drain of wealth from the Indian into Britain. They introduced the Zamindar system to extract maximum revenue from the Indian peasants. They introduced managing agency system through which it was possible for a handful of wealthy British to build and control a vast industrial and business empires in India, sometimes with assistance from the Indian partners. So basically, they bought up policies which will helpful for them, that is to foreign rulers. They bought Zamindar system and all. They used to start the business on their own in India, huge businesses. If they need a help, they used to take the local Indian partners, Indians as a partners in their business. After independence, we came up with the first industrial policy. Important, it might come in exam. First industrial policy in 1948. In 1950, preamble to the Constitution of India adopted in 1950 conferred on people the economic freedom and recognized the right to carry on the business and trade as a fundamental right. First 5 years policy was been launched in the year 1951. So what happened? 1948, first industrial policy. 1950, economic freedom to the people. 1951, first 5-year plan. 1956, industrial policy resolution. The industrial policy resolution 1956 was to usher in an era of direct ownership of government in business through departmental undertaking, statutory corporation, and government companies in the sectors private investment were either not able or willing. So through industrial policy resolution, government bought their own government companies where private companies weren't there to help the people. In the year 1956, the industrial policy resolution came. In 1990s, that is to be precise, 1991, LPG, that is emergence of new era, that is economic policy. When we had least foreign reserve with us, this came as gift to us. That is emergence of new era of economic policy in India, popularly known as liberalization, privatization, and globalization. LPG. Liberalization, privatization, and globalization. Policies of the 50s and 90s. See, evident nature of economic system. See, earlier in 1950s, socialistic economy it was with the dominant public sector. Okay, it was socialist. Now it is mixed. Dominant instrument of economic governance. Earlier it was economic plan, now it is market mechanism. Openness orientation. That time it was a closed economy. Now it is open economy. Role of government in business: acquiring commanding heights through the PSUs. They used to do, we had a lot of PSUs earlier. Now it is state ownership business as exception, privatization of public sector undertakings. So now hardly government owns the companies and all, and privatization of public sector undertaking is also done. Role of government versus vice versa, private business: regulation and control. Earlier it was regulation and control. Now it is liberalization and regulation. Earlier they used to regulate and control. Now they will leave as liberal, but they will regulate. What are the specters of government policies for business? Economic policies are there. Macroeconomic management. Government through the macroeconomic management, which are the fiscal policy, monetary policy. What do you mean by fiscal policy, sir? Policy relating to government expenditure in taxes and not non-tax revenue. So policy which are relating to government expenditure, where government is going to spend, health sector how much, transportation how much, education how much, those things, fiscal policies. And tax and non-tax revenues, how they are going to spend the money of tax as well as non-tax. Monetary policies, policy relating to supply of money, credit, foreign exchange broadly impact the business. So macroeconomic management, 2. 1. Fiscal policy, that is relating to budget, that is expenditures, revenues through tax and non-tax sources. Monetary policy means how much credit government is ready to give, how much money supply government is ready to do, what rate of interest they are ready to give, all those things. Foreign exchange management, all those things. Next is sectoral management, that is specific sector. Government formulating different policies to specific sector. Agriculture policy relating to agriculture, industrial policy relating to industry, foreign trade investment policy relating to foreign trade and investment. Now, macro policy indicator and their business conduciveness. I mean, what are the macro policy indicators, different macro policy indicators, and how they affect the business? See, GDP, inflation, tax rate, interest rate, exchange rate are the 5 most significant macro policy indicator which impact the business. GDP, first is GDP. If the GDP is rising, then your economy is growing. That is economic optimism, high demand expectation. GDP means your production is more. When you produce more, when the demand is more. So basically, the rise in GDP leads to a high demand expectation and economic optimism. Next is inflation. If inflation should be moderate, it should not be less also, it should not be more also. Demand and profit expectation is shown through inflation. Tax, lower the tax rate, benefit to the people, public. Incentive for investor in form of post-tax business income. For example, if you want to pay 60% of tax, whatever you earn, 60% will go to government, 40% will go to you. Are you really interested in doing a business? Of course, no. For example, here me shouting here in the class, and government tells, boss, 75 is mine, 25 is yours. I will stop teaching. So tax lower rate is, the lower and lower the tax rate is, the more and more good it is for the investors. Interest, the less the lower rate of interest, the cost of capital will become less. Exchange, that is foreign exchange, it should be moderate. That is, if foreign exchange is too more liberal, then imagine what about local market? Local market will get spoiled completely. So protection of domestic production, incentive for exports. So GDP, when it is good, when it is rising. Inflation, when it is good, when it is moderate. Tax, when it is good, when it is lower. Interest, when it is good, when it is lower. Exchange, when it is good, when it is moderate. So two moderates, which are the IG, inflation and IE, inflation and exchange, which are should be low, tax and interest, IT. GDP should be rising. Policy formulation and impact transmission process. Government policies are not drawn government policies are drawn not in closed chambers, but in the view of development aspiration of the nation. While formulating the government won't close its eyes. It will open its eyes and see the whole country. Boss, if I formulate this policy, how it's going to affect the country? Anything bad is going to happen to the country, or how it's going to help the country? Like that, they will think in the much broader way. The ultimate responsibility for policy formulation lies with the concerned ministry. The company related, all the policies should be made by Ministry of Corporate Affairs. Monetary policy, fiscal policy should be done by Finance Ministry. Agricultural policies should be done by Agricultural Ministry, like that. So the responsibility, ultimate responsibility lies with the ministry. The ministry in turn functions through the committees, commission and institutions. So ministry will be having different committees where well-learned people will be there, commissions will be there, where your IAS and all will be part of that, and institutions will be there to do the researches. At the ground level, the recourse is taken to a wider consultative and participatory process of engagement with the stakeholders. So policies are not formed directly by the government. They will take the consultation. They will ask the people to participate in policy formulation. The draft policies are put in the public domain for comments, critics, and suggestion. The policy thus framed are implemented and their impact is felt. So policy, it is not formulated and it is not imposed. Here in India, it is not like that. In other countries, it is there. Some countries, whatever they tell is policy. But here, it is not like that. Once they make a policy, they will put it in the public domain. Public can go through it. Public can comment on it. Public can criticize on it. Comment is not something like what you do in Instagram. No, not like that. You should write to the government. Then if government feels that, okay, whatever you people are telling is correct, then they are ready to correct before implementing that policy. Once it is implemented, then it should be implemented in such a way that their implementation and impact both should be felt. Formulation, policy context, like where the policy is applicable. To policy content, what are the contents of the policy? 3 institutions. Which are the institutions should help in formulation and implementation of policy? Instruments, markets and market participants. These are the things. 1, policy context. 2, policy content. 3, institutions. For example, RBI bringing certain policies through banks. So they will be instruments. They are bringing it through certain instruments, might be bonds, etc. Monetary policies through gold bonds. So many bonds they will bring. Market or market participants. It is important to note that the process is bidirectional. The real-time and post-implementation feedback enables their further calibration to better serve the purpose. It is not one-sided, it is always two-sided. Types of government policy by intended impact. From the perspective of their impact on business, we may categorize the government policies into 4. 1, protective policy. What are protective policies, sir? Protective policies aim to provide protection to the businesses so that this may sustain themselves and grow. So, for example, protective policy. Government will give certain policies. Export of these things are restricted. Import of these things are restricted. Dumping of these items to the India is restricted. They will protect the domestic market. Otherwise, those outside people will bring and dump the items in India, which means domestic market will die. So, certain protective policy business government might bring. Restrictive policy, that is, put a curb on business growth, lest it should become determinantal to the interest of the consumer and public at large. Certain restriction government might bring on the businesses. Boss, you can't do certain things. You can't do these things, like that. Regulatory policies. Policies aim at putting in place an institutional setup for the organized functioning of the relevant activity or a market. For example, to regulate the stock market, government bought a SEBI. To regulate the banks, government bought a RBI. like that. To regulate the insurance, they bought a IRDA. Like that, they might bring certain policies which will regulate the organization in that environment. Facilitative or developmental policies. These are the ones which facilitates the activity. The conducive policies towards the development of MSME, that is medium, micro, small, medium enterprises, are an example of facilitating policy. That is, it will help. One, it protects, it just protects. Whereas business is growing on its own. As a business person, government will secure and give. It will not help you in growing. You should grow on your own. Two, it restricts certain things in accordance with the interest of the public. Three, it brings certain institutions through the policies to regulate your area of operation. Four, facilitative or developmental. Here, business will push you. You have to grow. The business will help you grow. Certain economic change processes. One is liberalization. What do you mean by liberalization, sir? Earlier, there were a lot of restrictions were there. Now, it is all about liberalized, which means they loosen the restriction. See, liberalization means to remove or to loosen restrictions. This happens via dismantling of license and permits, deregulation, easing of approval, systematic losing of legislation and administrative control. For example, let's say certain businesses, they need 10 licenses. Instead of government told, boss, 10 license and all, you don't need to go. In one license only, we are going to do all the work. One license is enough. Like that. Reducing the work, reducing the restrictive works, ease of doing business, helping them doing business easily. Liberalization may be defined as systematic process of enlargement and enhancement of freedom of the private sector in the economy. So they enhancing it or enlarging the freedom to the private sector in the economy. Liberalization has resulted in the opening of a host of new industrial sector for private enterprises that were hit their exclusive state monopolies. So earlier there was only government owned companies in certain things. For example, Air India for flights, like that. Now they opened it. Anyone can participate, like that. In most cases, liberalization meant greater freedom not only for the domestic private sector but also for the foreign direct investment. Earlier, foreign direct investment were restrictive. Now they reduce the restriction. So you can bring the foreign investments. The list of industries reserved solely for the public sector, which used to cover 18 industries. So earlier only public sector, which means government could have done these 18 industries. Government could have bought up these 18 industries, including iron and steel, heavy plant and machinery, telecommunication, telecom equipment, minerals, oil, mining, air transportation service, electricity generation and distribution. Later, they drastically reduced it to 3. So basically, they reduced these 18 industries into 3. Okay. So which are they? Defense, aircraft, atomic energy, railway transport. So basically the 18 industries which were reserved to the government, now they drastically reduced it to 3. Defense, atomic, railway. Industrial license by the central government has been almost abolished except for few hazardous and environmental sensitive industries such as alcohol, cigarette, industrial explosive, aerospace, drugs and pharmaceuticals. So earlier all the industries should have got industrial license, but now from the central government, but now they took it out. Hardly they kept it for few, which are hazardous to environment, like your cigarette, drugs, aerospace, drugs in the sense medicines, aerospace, industrial explosives, etc. This is all about liberalization. That is making the life of business easy. And earlier, it was many things were with the government. Now liberalized it. Private people can come and enter. Next is privatization. Privatization refers to a managerial approach of changing the ownership structure of one or more government-owned institution, which means the government-owned institution will be there, no, giving it to the private people, selling it to the private people. Privatization can be advantageous in terms of the higher flexibility and scope of innovation it offers along with the cost saving many a times. However, it has an adverse impact on the employee morale and generates fear of dislocation or termination. So, privatization brings a flexibility, we agree. Scope of innovation, we agree. It helps in cost saving, we agree. But also, it kind of brings adverse impact on the employees, where they will lose their morale. They will start fearing, what if they lose the job? Because now what it is, government job secured, do whatever you want, secured. But once it gets privatized, then once private people come, they don't tolerate. If they tolerate, they can't save the cost. So that is one of the disadvantage. Government decided to privatize the loss-making companies fully and the profit-making ones and banks partially. So government literally privatized all the loss-making and profit-making things and banks into partially. Privatization helps in a big way to enhance the market potencies by enhancing the efficiency, quality, and competitiveness. Privatization is an essentially effective tool for rapid restructuring and reforming the public sector enterprises. Privatization may be conceptualized in the following prominent types. One is delegation. That is, what is delegation, sir? Government keeps hold of responsibility and private enterprises handles fully or partly the delivery of the product or service. There is an active involvement by the government. Delegation may help through contract, franchise, grant, etc. Government only will handle the things. Government will only government will only hold the ownership. Government will only keep the responsibility, but they will give kind of contracts, tenders and all, where private people work for government people. That is called as delegation. For example, IRCTC, train, food. The ownership of selling the food in the train reserved by government. But of course, they will call for the tender who can prepare food for them. Like that it is. Divestment. Government surrenders partial ownership and responsibility and sells the majority stake to one or more private enterprises in the course of time. So here government, they are going to sell their majority of the stakes to the private people. Then they will become owner. Displacement. The private enterprises expands and gradually displaces the government entity. Deregulation facilitates privatization if it enables the private sector to challenge a government monopoly. The government monopoly through BSNL and MTNL has been displaced. So displacement means government company will be there, but private companies will enter the same market and they will make sure that government will go out of the business. For example, now BSNL, who uses the BSNL? Very few people uses the BSNL because all other industry came and took it out. That is displacement. Disinvestment. Selling a portion of ownership in a public enterprise to a private parties. That is called as disinvestment. This is liberalization and privatization. Next, inward foreign direct investment in India. FDI, foreign direct investment, means getting a capital from the foreign citizens or a foreign companies. Getting an investment from the foreign citizens or a foreign companies. FDI may be described as a flow of capital investment to an enterprise in a nation by another enterprises located in a different nation by capturing a majority of stake in the ownership in a company in the targeted country or by expanding the operation of existing business in that country. So FDI means what? One, for example, some investors of America coming to India, and investing in the Indian company, ownership, taking the ownership of that one, or American company entering into Indian company and doing the business here. Okay, by investing here. For example, let's say Apple people coming to India, and in India there is already one company, they are tying up with that by taking certain ownership. Or Toyota people coming to India and taking a certain shares of Kirloskar and they are producing here one. Or Toyota people, they are coming up with their own brand, with their own company, 100% ownership of Toyota only. That is foreign direct investment. Permission for foreign direct investment is not uniform for all sectors. So it is not a uniform to all sectors to get a same kind of permission for foreign direct investment. Some sectors are open for 100%, and in some sector it is allowed only up to 26%, 49%, 51%. Because imagine you give everything to foreigner and sit. Foreigners first place they are hardly liable for the Indian law or regulated by the Indian law, certain Indian laws. In that, you will leave them free. It won't work like that. That's why government, certain sector where there is no risk, in that sector they allowed 100%. In certain sector where there is more risk, they allowed 0%. Certain sector where there is bit of much risk, they allowed 26%, 49%, 51%, like that. Areas like media, defense could compromise on Indian security interest, and hence no FDI should be permitted. So in the media defense, in media and defense, no FDI is allowed. In certain areas, FDI is limited, has been capped, like insurance business, where there is no approval through automatic route, which means you cannot get a approval through automatic route. The company concerned has to seek the permission from the foreign investment facilitation portal. So to invest in the insurance company of India, the foreign direct investors should get a permission first. They won't get a automatic route entry. Few sectors where FDI is prohibited under both the government route as well as automatic route. That is, certain sectors where you can't enter through automatic route without permission or with permission, which are the one, atomic energy. So atomic energy, foreign direct investment is not allowed. Lottery business, foreign direct investment is not allowed. So lottery business, it is banned, no? Lottery business is not banned in all over India. Lottery business is banned in Karnataka. Gambling and betting, this is banned. Business of chit fund, Nidhi company. Agricultural and plantation activities. Agricultural and plantation activity, FDI is not allowed, but excluding floriculture, horticulture, development of seeds, animal husbandry, pisciculture, there is fish, cultivation of vegetables, mushrooms, etc. under controlled condition, service relating to agro and allied sectors. Plantation activity also, it is not allowed except for tea plantation. Tea plantation, foreigners can come and enter. Housing and real estate business, except development of township, construction of residential commercial premises, roads or bridges to the extent of specified. Trading in transferable development rights, TDRs. Manufacturers of cigars, cheroots, cigarillos, cigarettes, tobacco, etc. For that also foreign investment is not allowed. FDI is not allowed. Now one more thing comes, foreign institutional investors. There we saw foreign direct investment. Here we are seeing FII, foreign institutional investors. Who are they? FIIs are large foreign groups with substantial investable funds. FIRs are registered abroad with the view of investing in the other nation to invest in the equity market, hedge fund, pension fund, etc. They are not investing in the ownership. FIIs are not investing in the ownership. They are just the investors to make certain money. That's it. They will come and they will invest in hedge fund, they will invest in stock market and all. FIIs have strong research team which speculate to invest in a country with the possibility of strong return in the equity market. They are least bothered about ownership. All they want is more and more returns. So they will be having research team. They will do the research. Which country will give you more returns in near future? They will go and invest in that country. Naturally, for small period of the nation experience inflow of strong foreign currency in its financial system. Because of this FIIs, usually whenever they start investing, no, nation will kind of feel the more and more inflow in the currency into foreign, financial system. Whenever the market reaches the peak and starts declining, which means return starts declining, these people will take their fund and move to the other country. Whenever the market reaches a peak and starts declining, thereafter, this fund move to the other nation. These fund park their funds to fuel a bullish market. What do you mean by bullish market, sir? It is there in your BCK terminologies. Okay, 6th chapter. Bullish means they expect price to go high. Investment from India abroad, which means not only you getting a money from the abroad, also you can invest in abroad. That is policy of globalization as favored in India, not only in terms of inward FDI, but also in terms of outward FDI or OFDI. That is, Indian firm can invest in the foreign, abroad too. This is all about this chapter. Hope it is clear. Hope it is clear, people. Hope fourth chapter is clear. It is 8:59. We'll start the next chapter exactly at 9:1. And it is also not much big chapter. We can complete quickly. And BCK terminologies, you people only kindly go through. Because if I start explaining that chapter, you need half a day to explain that. Yes, if you have doubt in those two chapters or any of the chapters are relating to your CA foundation, feel free to contact. Chalo. We'll start now. Organizations facilitating business. Different organizations which are helping the business. First, we will understand who are business facilitators. See, business facilitators as a system of arrangement that ease of doing business. Business facilitators are the system which help you people in doing a business easily. Business facilitator is defined as an intermediary in financial sectors. Okay, they will be treated as intermediaries in financial sectors. See, they help in different ways. One, freight forwarder. One kind of your business facilitator is freight forwarder. A person or a company who organizes shipments for the business firms to get goods from the manufacturer or to producer to a market, customer, or a final point. Basically, the person who helps with the transportation of the goods or services from the person who supplies it to you or from to you to your customer. They are called as freight forwarder. That is a person or a company who organizes shipments, that is logistic service for the business firm to get a goods from the manufacturer or producer to a market, to customer or final point of distribution. They are called as freight forwarders. That is the people who helps you with the logistics will be called as freight forwarders. Next is business incubator. Business incubator. These are the people who helps create and grow young businesses by providing them with the necessary support and financial and technical services. So business incubators are the people who help the small organization, young businesses by providing them a financial services as well as technical services. So business incubators helps the young business by providing necessary support in financial as well as technical terms. Financial accelerator. These are helps a budding business quickly launch a product and put in fast lane of commercial success. So financial accelerator helps in rapid growth of the new businesses. That is to help them in launching their products. Financial consultants. who advises the business on the various sources of finance, domestic as well as foreign, debt as well as equity. Basically, the one who assist a business relating to taking the financial decisions are called as financial consultant. Merchandiser, who helps the business, that is literally for a fashion business, fabric, accessories and all, who supplies that guy. Basically, in any way, anyone helps the business, they are called as merchandisers. So basically, business facilitator, who helps the business, they are different kind. One, freight forwarder, who helps in logistics. Two, business incubator, who helps the new organizations, small organization through financial and technically. Three, financial accelerator, that is helping the budding businesses to launch their product. Four, financial consultant, who gives suggestion to the business relating to financial aspects. Five, merchandiser, who helps the business. Government as a business facilitator. So government also acted as a business facilitator and acting as a business facilitator. In 1951, the Union government enacted the Industrial Development and Regulation Act. The IDRAI, Industrial Development and Regulatory Act of India, entrusted the government with the responsibility of ushering in economic development via industrialization of India. So it entrusted the government to develop the Indian government, to develop the India by developing the industries. The Industrial Policy Resolution of 1956, providing for the respective roles of the public sector, large industries, small scale industries, guided the growth business, etc. They are helping in the growth of the different businesses. The new economic policy in the 1991, which is known as LPG, that is the policy of liberalization, privatization, globalization, is regarded as the watershed development in the business facilitation in India. Certain non-funding institution for business facilitation. They don't give you loans and all, but they will make sure somehow they are going to help you out. In that, one is RBI. RBI established on 1st April, April Fool's Day, 1935, in accordance with the provision of the RBI Act 1934. So what is the RBI Act 1934? When the RBI came into existence, 1st April 1935. It got nationalized in 1949. RBI fully owned by the government of India. It is not privatized or not. It is not privatized. It has a central office in Mumbai. In this they might ask certain questions. One, RBI established on 1st April 1935 through the RBI Act 1934, nationalized in 1949. RBI is fully owned by the government, having a central office not in Delhi but in Mumbai. Which are the role? One, RBI is the apex main monetary institute, which is the highest authority in India. It is responsible for the maintenance of economic stability and assisting the growth of economy. It is India's eminent public financial institution, given the responsibility for the controlling the country's monetary policy. It acts as an advisor to the government in its economic and financial policies. It also acts as a friend, philosopher, and guide to the commercial banks. India being an emerging economy, the RBI has to keep the inflationary trends. They are the one who controls the inflation through different instruments. It has also to protect the market for government securities and channelizes the credit to desired direction. Different functions: issuing of currency. The currency in India is issued by government. Banker to the government. RBI acts as a banker to the government. It manages the public debt and sells the treasury bill and all. Next is bankers bank. That is RBI helps as the banker banks. Whenever the certain banks need a loan, they will go for RBI. And whenever the money is more in that particular banks, RBI will suck that money so that economy won't be having the excess money. Custodian of foreign exchange reserve. That is, RBI acts as a custodian of foreign exchange reserve and it controls the credit through different monetary policies, promotional functions. It promotes certain good banking regulation. It promotes banking activities, banking habits to the people. You might have seen PV Sindhu coming, or your Umesh Yadav, Ishan Sharma, KL Rahul, those people coming and giving ads. And at the end, it is like RBI in public interest. collection and publication of data. Monetary related data, they will collect and they will publish it. RBI role in business facilitation. Currency policy, that is monetization, demonetization, remonetization, all those things taken care by RBI, because of which, of course, the business is going to get affected. Credit policy, different credit policy, RBI is helping out. For example, SLR, that is what those bankers should keep with the RBI, like that. Next is development of financial system. RBI develops the financial system in the country, that is in India. Fund transfer and payment mechanism. RBI coming up with the different ways of fund transfer and payment mechanism. Might be UPI, card, internet banking, all those things. This is all about RBI. So what are the functions? Issue of currency, banker to the government, banker's bank, custodian of a foreign exchange reserve, controller of credit, promotional function, collection and publication of data. RBI's role in the business facilitation, currency policy, credit policy, development of financial systems, fund transfer and payment mechanism. Now going to SEBI, that is the one which regulates the stock exchanges in India. Established by the government on 12th April, that is 1st April, here it is 12th April, but that is on 1935, it is on 1988. SEBI Act 1992 has come into force with effect from 30th January 1992. So SEBI Act 1992, effect from 30th January. Headquartered in Bandra, Mumbai. This is also headquartered in Mumbai. RBI also headquartered in Mumbai. This is also headquartered in Mumbai. This is important. SEBI consists of chairman, 2 members from ministry, 1 member from RBI, 5 other members, out of which 3 members shall be a whole time, which means they should be there in the committee all the time. They should come to the regular work full time means. So SEBI consists of 1 chairman, 2 members from the ministry, 3 1 members from the RBI. So how many people now? 1, 3, 4 plus 5, 9. Out of that 5, 3 should be full time. Functions and responsibility of SEBI. 1, issuer of securities. The investor, the market intermediaries. So these 3 things the SEBI is controlling. 1, the people who issues the securities, basically the companies. 2, the investors, that is people who invest in such securities. 3, the market intermediaries, the brokers and all. SEBI has 3 functions: quasi-legislative draft regulation, quasi-judicial passes ruling and order, quasi-executive conduct investigation and enforcement. 1, SEBI has 3 functions: 1, to draft the regulation, 2, pass the ruling and orders, 3, to conduct investigation and enforcement. There is a security appellate tribunal, consists of 3 members. So security appellate tribunal will consist of 3 people. Powers of SEBI. 1, approve bylaw of stock exchange. Stock exchange bylaws will be there, no? That should be approved by SEBI. Require stock exchange to amend their bylaw. If any bylaw of the stock exchange is harmful for the society, harmful for the public, SEBI might ask them to change it, amend it. Inspect the books of accounts and call for the periodical return from the stock exchanges. They can inspect the books of accounts and call for the periodical return from the stock exchange. Inspect book of financial intermediaries, that is your brokers, stock brokers and all. You might have seen Zerodha and all those people. Compel certain companies to list their shares in 1 or more stock exchanges. That is restricting or controlling certain companies in issuing their shares. SEBI's role in business facilitation enables firm to raise funds in the capital market and causes them to institute effective mechanism. Because if the stock exchange are strong, or if the stock exchanges are really controlled by someone, then automatically the trust of the people will be more on that. Automatically they start investing. Competition Commission of India, the other institution, Competition Commission of India, which means they look after the competition in India. The adverse competition and all should not be done. If it's done, automatically they are going to put a huge penalty on the business. Competition Commission was set up to create and sustain fair competition in the economy that will provide a level playing field to the producer and make the market work for the welfare of the consumer. Competition may be either direct competition or indirect competition. What do you mean by direct competition? Product that performs the same function to compete each other. Cement with cement. Indirect competition. Product that are close substitute for one another. Competition. Example, fine dining restaurant with a local restaurant. Benefits of free and fair competition. What will be the benefits? What will be the benefits if there is a free and fair competition? One, it encourages the innovation, increases the efficiency, pushes the laggards, boost choice, improves quality, reduce cost. Because once you know there is a competition, automatically you struggle for price competition or quality competition. Ensures availability of goods in abundance. That is, whenever it is available in the affordable price. Competition is not there, then it will be monopoly. You know what happens when there is a monopoly, right? Supplier power, supplier bargaining power, whatever they tell, that is the price what you should pay. Features of Competition Act 2002. Prevent practices having appreciable adverse effect on the competition. It will prevent the practices which will have the adverse effect on the competition. Promote and sustain competition. They will promote, also sustain the healthy competition, protect the interest of the customers, ensures freedom of trade. Earlier ones, the cement industries all came together and they stopped competing. They are like everyone will charge the same price. Without cement, people can't do anything. That was affecting the people. So they paid huge penalty. So that is because of Competition Act. CCI, Competition Commission of India, established by the central government on 14th October 2003. So basically, it is established on 14th October 2003. Chairman and 6 members will be there. Whereas in your SEBI, 9 members, here it is 7 members, 1 chairman and 6 members. Objectives of CCI: to prevent a practice having adverse effect on the competition. If any practices are done which has the adverse effect on the competition, then to prevent that. To promote and sustain competition in the market. To protect the interest of the consumers, ensure freedom of trade. Role of CCI: work for the benefit and welfare of the consumer, fair and healthy competition, implement competition policy, develop and nurture the effective relationship and interaction with the sectoral regulation, effectively carry out the competition advocacy and spread the information. Role of CCI as a business facilitator: ensures coexistence of a large and small enterprises. Otherwise, if there is no competition regulation and all, large enterprises will hardly take few minutes to take out the small enterprises from the business. So it ensures coexistence of large as well as small enterprises. Prevents misuse of dominant position in the market against the other businesses. If any business is trying to misuse its position, then CCI will make sure that they pay a huge penalty and they will take actions. This is all about Competition Act, Competition Commission of India, Competition Act and Competition Commission of India. Insurance Regulatory and Development Authority of India, IRDAI. It is a autonomous apex statutory body. IRDA Act 1999. According to that, it's formulated. So it is an apex body for the whole insurance industry. Mission statement of the authority. What are the mission statement of this particular IRDAI? To protect the interest and secure fair treatment to policyholders. So to protect the interest of the policyholders, otherwise insurance companies will act as per their wish. Speedy and orderly growth of insurance industry. In India, insurance industry still it is underdeveloped. Still people have to trust the industry, like industry of insurance. So to help this, to set, promote, monitor and enforce high standard of integrity, financial soundness and fair dealings and competence. To ensure speedy settlement of genuine claims, to prevent insurance frauds and other malpractices. To promote fairness, transparency and orderly conduct in the financial market dealing with insurance. To take action where standards are inadequate or ineffectively enforced. Optimum amount of self-regulation. These are certain mission statement of authority. Basically to protect the genuine insurances, to protect the genuine insurance holders. Duties and powers and functions of IRDI. Issue to the applicants a certificate of registration, renew, modify, withdraw, suspend or cancel such registration. That is to issue registration certificate to the new insurance companies, renew the certificate of the old insurance companies, modify if any changes are required, withdraw the certification given to the certain insurance companies, suspend or cancel such registrations. Protection of the interest of the policyholders, specifying requisite qualification, code of conduct, and practical training for the intermediary. To be a insurance broker, you should be having certain qualifications now. To specify all those things, which who is specifying? IRDA is specifying. Code of conductor for surveyor and loss assessors. So the surveyors and loss assessors are the one. For example, let's say one building got fire. Now, what is lost in that, whether it is genuine or not, all those things should be checked, no? So that would be done by your surveyors, are also called as loss assessors. Promoting efficiency in the insurance business, promoting and regulating professional organization connecting with the insurance, laying fees or other charges, calling for information, inquiry and investigation, controlling regulation rates, advantages, terms and contract, specify the form and manner of books of accounts and statement of accounts in what the insurance company should maintain, regulating investment of funds, regulating maintenance of margin of solvency. See, insurance companies, according to IRDA, they should have a capital adequacy of at least 100 crores all the time. Adjudication of dispute between insurers and intermediaries, supervising the functioning of the tariff advisory committee, specifying the percentage of premium income, specifying the percentage of life insurance and general insurance business, exercising such other power as may be prescribed. Role of IRDA as a business facilitator. Insurance is an important aid to the business. All the businesses will have one or the other insurance, fire insurance, stock insurance, loss of profit, all those things. So these are the important aid in the business. So if the insurance industry itself is not good, then how come the business can trust such industry? So insurance is an important aid to the business. IRDA ensures that this important service efficiently enable the transfer of business risk. So kindly refer table in page number 5.14 in the ICI study material. Okay, that is the difference between these institutions and all comparisons. Next, these are non-funding institutions. Now going to funding institutions. They provide for the need for the day-to-day operations, working capital. They provide for the capex, that is capital expenditures will be there, no big machineries, huge expenditures. That one. Industrial Financial Corporation of India in 1948, that is formulated to give the financial aid. Industrial Credit and Investmental Corporation of India, ICICI. Industrial Credit and Investmental Corporation of India, 1955. Industrial Development Bank, IDBI, in 1964. So IFCI in 1948, IFCI in 1948, that is Indian Industrial Finance Corporation of India. Industrial Credit and Investment Corporation of India, ICICI, in 1955. Industrial Development Bank in India, IDBI, in 1964. NABARD, National Bank for Agricultural and Rural Development, important bank. It is a apex development bank in India. It is head bank in India. Head office, headquarter in Mumbai. So SEBI headquarter in Mumbai, RBI headquarter in Mumbai, NABARD headquarter in Mumbai. Bank is entrusted with the matters concerning policy, planning and operations in the field of credit for agricultural and other economic activities in rural area in India. So basically they are concerned with agricultural and rural development. NABARD is the most important institution in the country which looks after the development of the cottage industry, that is industries without electronic usage, small industry and village industry and other rural industries. NABARD, besides agricultural, also reaches out to allied activities such as poultry farming, animal husbandry, support and promoter of integrated rural development, etc. They are not only relating to agriculture, also supporting activity also they help with. NABARD discharge its duties by undertaking the following rules. So they do the following roles to undertake its responses and all, responsibilities. Serves as a apex financial agency for the institution, providing an investment and production credit for promoting various development activities in rural area. So for rural area and development, any financial institution which are providing a financial aid and all, no, for them it acts as a apex body. takes measure towards institution building for improving absorptive capacity of the credit delivery system, including monitoring, formulating, rehabilitation scheme, etc. for rural areas. Coordinates the rural financial activities of all institutions engaged in the development work of the field of maintenance of liaison with Government of India. Liaison means communication office, state government, RBI. So basically they coordinates with all the rural financial activities. Undertakes monitoring and evaluation of the project refinanced by it. NABARD refinances the financial institution which finances the rural sector. So if any financial institution is ready to finance the rural sector, for them, they need the money, no? NABARD is going to help them out. NABARD partakes in development of the institution which helps the rural economy. NABARD also helps keep a check of its client institutes. It regulates the institution which provides the financial help to the rural economy. It provides training facility to the institution working in the field of rural upliftment. It regulates the cooperative bank and RRBs, etc. IBPS, CW, etc. NABARD is also known for its SHG Bank linkage program, which encourages Indian Bank to lend self-help groups. In Kannada, we call it as Swasahaya Sangha. That one, to help that self-help groups. If any institute is ready, NABARD will help them. Largely because SHGs are composed mainly of poor women, this has evolved into an important Indian tool for microfinancing. So we are done with all the 4 chapters which we had a target of doing. The other 2 chapters, see, one is relating to your that different companies and all, that kindly go through it. Notes I am going to share. And the 6th chapter relating to terminologies, that also kindly go through on your own. And remember, this is the last attempt under old syllabus. So please give your best. And I know you will make sure you will clear this time for sure. And all the best for your examinations. Okay. So with this, we'll close the session. And in between, I have given my number. If you want, take down once again 7975573718. If you need any help, you can feel free to contact me. Thank you all. And I will meet you people in your intermediaries. Okay, we'll meet in intermediate. Thank you all. Bye bye.